Welcome to This Explainer. Today, we're doing something pretty exciting. We are taking the massive, honestly incredibly dense, 2,700-page 2025 IPSAB Handbook, and we're decoding exactly how public money is tracked, managed, and reported all over the world. If you've ever found yourself wondering how nations, states, or even local governments actually ensure transparency with your tax dollars, well, you are in exactly the right place. We're going to break down the core foundation that holds governments financially accountable. Let's get right into it.
So here is our roadmap for today. 1. The public sector difference. 2. Who sets the rules? 3. The primary users. 4. Beyond the balance sheet. And finally, 5. Quality control for data.
All right, Section 1, the public sector difference.
So why can't a government just balance its books like a business? You know, it's a question we hear literally all the time. People always say, why can't the government just run like a private company? But as the conceptual framework explicitly points out, a nation-state or a local municipality is absolutely not a profit-driven corporation. Their foundational purposes? They are completely different.
Think about it. In the private sector, everything revolves around exchange transactions. Value for equal value. You pay $1, you get $1's worth of coffee. But the public sector? It thrives on non-exchange transactions. Governments exist to redistribute wealth and deliver services funded by mandatory taxation. And let's be real, the amount you pay in taxes rarely mirrors the exact value of the government services you individually use. That massive disconnect fundamentally alters how we have to track the money.
And this whole dynamic creates some really unique operational quirks. Unlike corporations, governments are essentially immortal, right? They often span centuries. Plus, they possess the sovereign power to tax, and they hold highly specialized assets. Think military bases or national heritage sites. They don't hold these for cash flow, but purely for their public service potential. Oh, and the legally approved budget dictates absolutely all operations. Put all that together, and it's obvious why these factors demand a completely tailored set of accounting rules.
Moving on to Section 2. Who sets the rules? Enter IFAC, the International Federation of Accountants. They represent over 3 million professionals globally, and they provide the absolutely crucial backing and funding for the architects of public sector standards.
And who is that architect? It's the IPSASB, the International Public Sector Accounting Standards Board. They are a strictly independent standard-setting board that develops the actual rules known as IPSAs. They build standards for both cash basis and accrual basis accounting. And what's really great is that their due process is entirely transparent. They have public access to agenda materials and heavy involvement from observers, just to ensure total independence and a complete focus on the public interest.
Their ultimate mission here is vital, to harmonize all these different national requirements into a single, high-quality framework. By adopting IPSAS, governments vastly improve both the quality and the comparability of their financial information. Whether you're looking at a local municipality in Europe or a national government in South America, the goal is to bring ultimate transparency to public finance. It's about making sure the data speaks one single, universal language.
Okay, Section 3. The primary users.
Now, unlike Wall Street, our core audience here isn't chasing quarterly dividends. The primary users are the service recipients, us, the citizens. It's the resource providers, meaning the taxpayers and lenders who are actually footing the bill. And crucially, it includes our elected representatives who desperately rely on this data to hold the executive branch accountable.
These documents are actually called general-purpose financial reports for a very specific reason. Listen, as an everyday citizen or a taxpayer, you don't have the legal authority to just march into a government agency and demand a customized financial audit. You just can't do it. Because you can't request tailored data, these general-purpose reports are designed to bridge that gap. They give you the visibility you need to assess accountability and ultimately cast an informed vote.
Which brings us to Section 4, Beyond the Balance Sheet.
The contrast between corporate and government reporting is actually pretty stark. While the corporate report focuses heavily on profit margins and quarterly earnings, a public sector report has a much wider mandate. It has to measure budget compliance, prove actual service delivery achievements like, say, real healthcare outcomes, and prioritize long-term, multi-generational sustainability way over any short-term financial gains.
Let's talk about that budget compliance for a second because it's huge. In the public sector, the approved budget isn't just some helpful spreadsheet or a loose financial guideline. It is literal legal authority for spending. The legislature approves it, and it becomes the absolute primary tool for holding management financially accountable. Comparing actual financial results against this approved budget, that's how citizens and representatives actually know if the government followed the law and met its financial objectives.
And because government programs span generations, think about Social Security, long-term infrastructure projects, or environmental protections, financial statements that only look at the past just aren't going to cut it. The conceptual framework dictates that reports absolutely must include prospective, forward-looking information. We need to know the future financial capacity of the government so we can answer the ultimate question. Can future taxpayers actually afford the promises that current politicians are making today? It's a heavy question, right?
All right, our final section, 5, quality control for data. The framework establishes 6 qualitative gold standards for data. First, it has to be relevant to decision-making. Second, it must faithfully represent the economic reality. Third, it has to be understandable to a diligent user. And on top of that, it must be timely, comparable across different jurisdictions, and totally verifiable by independent observers.
Let's look at faithful representation, for instance, because this is a massive pillar of the framework. It requires the data to reflect the true economic substance of a transaction, not just some clever legal loophole. It has to be complete, and it must maintain strict neutrality. And by neutrality, I mean an absolute absence of bias. No spinning the numbers to make a political administration look better or worse. It just has to be the raw, accurate truth, completely free from material error, and supported by a healthy dose of caution and prudence.
Now, of course, the IPSASB acknowledges real-world constraints. You obviously can't track every single paperclip a government buys. And that brings us to materiality and the cost-benefit reality. If leaving out a tiny piece of information wouldn't change a citizen's assessment of the government, then, well, it might not be material. Plus, if the cost and effort of gathering a highly specific piece of data far outweighs the benefit it provides to the public, the framework allows for practical constraints. It is always this delicate balancing act, providing the absolute best transparency without wasting valuable public resources to get it. So now that you understand this incredibly detailed, structured framework that exists to hold governments accountable globally, I'm going to leave you with a provocative thought. How well does your local or national government measure up? Are they providing you with data that is genuinely understandable, perfectly neutral, and forward-looking? The rules for transparency are out there. They exist, but it's really up to us, the primary users, to expect them. Thank you so much for joining me for this explainer, and I highly encourage you to go look closely at your own local general-purpose financial reports, but this time with a brand new perspective.